Gentlemen, hi. Morning. Great to have you guys on board. Feroze, let me start off with you. What do you think is the broad expectation when it comes to, changes in the tax regime for debt mutual funds? Because there's a lot of speculation out there.
Good morning. I think, the last budget only included Section 50AA, which made sure that debt taxation also remains short-term irrespective of the holding period. So there is, of course, a speculation that the tax will become favorable again. Long-term definitions will come back to 3 years. But I think it's going to be difficult to undo something which went into a budget last year by the same government. So that's point one. Point two, if you look at taxation differentials exist because of three reasons. One is the nature of the asset, one is STT or non-STT, and the third is whether it's listed or not listed. If Bharat Bond ETF, which is a listed debt instrument, non-STT paid, if you tweak the taxation for Bharat Bond ETF, all the three, if they remain identical, then bonds, which are listed bonds, should again be taxed at 20%. So I personally think tweaking or giving an exception to Bharat Bond ETF is going to be difficult because these are the three reasons why taxations differ in debt instruments. And if Bharat Bond ETF was supposed to be tweaked, listed bonds should also be tweaked. And Section 48 does not permit indexation in those bonds. So I think there was a lot of anomaly. The anomaly has been plugged by a lot of lobbying from the banking side last year. That's our assumption. So undoing that is going to be difficult, but there's certainly, like you rightly said, there's a lot of speculation on that.
Some would say that, look, the tax structures have to align with what the reality is, whether it is equity or debt. So this is the reality, and that is the way it should be.
Yes, Nikunj bhai, like you rightly said, there has to be reality. When it comes to taxation, there has to be fairness. Anomalies have to be addressed. This whole taxation change came about because of fixed maturity plans or the funds where you take one, hold to maturity, you take a government bond, put it in a wrapper, and you have 2-3 bonds in it, and you hold it till maturity, no fund manager change, and you get tax benefit. But those underlying instruments, if held as an individual, don't get indexation, don't get tax benefit. So the anomaly was plugged. Point one. Point two, like you said, sir, taxation has to come to reality. Corporate tax was simplified. Direct tax was income tax were simplified, and with the new tax regime, I think capital gain is next on the anvil for a modification and simplicity. There's a screaming need for capital gains in India to be simplified. Asset classes, real estate has 2 years, debt or partial debt has 3 years, equity has 1 year, different tax rate, STT, non-STT. It's a three-dimensional matrix, and I really think that Nikunj bhai, जैसे आपने कहा कि ये reality पे आना चाहिए और simplicity पे भी आना चाहिए. I think capital gain is a screaming need.
Okay. Where does arbitrage scheme fit in this?
Yes, Nikunj bhai, see, arbitrage funds fit in beautifully in a short end. If whenever the short end yield of the yield curve is elevated, arbitrage funds are a beautiful instrument because an arbitrage fund goes long on equity, shorts this month's futures, and this premium is going to be largely dependent on not the 10-year G-Sec, but the repo rate and the 6-month, 3-month T-bills. So arbitrage fund beautifully fits in today because what's unique about Indian debt markets now as against what has happened over the last 10 years is we have a flat yield curve. So in a flat yield curve, which has short end of the yield curve elevated, arbitrage fits in very well from an objective standpoint, one. From a taxation standpoint, it is just out of the world. It's like a free lunch, which seldom exists. Because even if you invest in an arbitrage fund, from a 6-month standpoint, you get away paying 15% tax. Where if you hold a debt fund for even eternity, you're going to be paying marginal tax rates. So anybody in the highest tax slab should capitalize on the flat yield curve and elevated short end to get that 6, 7, 8% in the arbitrage fund. And the taxation, even for short-term monies, is 15%. That's why arbitrage funds have seen influx. And it used to be about a couple of years back, before the rate cycle went up, it was just about 10-12,000 crores of assets. Now it's upwards of 1.5 lakh crores. That's because of this huge tax benefit and also the short trend of the yield curve being higher.